Hello ladies and gentlemen, and welcome to the Strategy of the Week for Friday the 13th of September 2013. My name is Dan Misch. I'm the Director of Retirement Services for VectorVest, and I'm happy to take us through this week's presentation. We've titled this strategy VST Leads the Way, and it's going to begin with the when to buy signal of using the DEW timing system. And we'll get to that when we move over into the program in just a moment. For our what to buy, we're going to use stocks that are chosen by their VST score. And we're going to use 3 different searches out of the VectorVest program this week. And our when to sell is going to be using a stop of a VST of less than 1. Now the original concept for this strategy of the week was shown on Friday the 24th of May earlier this year. But we've got a lot to get to add to that for tonight's presentation. We'll begin in VectorVest here on a market timing graph. And this is set up in the DEW timing system layout. So what we're looking at here is the price of the VectorVest composite in the green and red candlesticks, and we've overlaid some technical indicators around that price. We do have an upper and lower envelope, the turquoise lines. The white line intersecting the price over the past year is a 30-day weighted moving average. And the technical indicator shown on the subgraph is a DPO, which is a detrended price oscillator. Basically, it oscillates above and below a neutral line of 0. And the green and red arrows shown on the top of the graph are the different DEW up and down signals we've had over the past year. So you can see we're in a DEW up right now, which was issued on the 9th of July. And in order for that up signal to be triggered, the price of the VectorVest composite has to close up above its 30-day weighted moving average. And this DPO, which is tracking the price of the VVC, has to close up above that neutral line of 0. You can see that happened there on the 9th of July, and we're still in that same DEW up. So that's what we used for a timing signal telling us to get in to the market. It is just the opposite for a DEW down signal, with the price closing below the 30-day weighted moving average and the DPO moving to the downside. However, for this week's strategy, we're not going to go to cash on the issue of a DEW down. We're going to stay in our positions and let that VST score manage the portfolio for us. Now we're looking in the Unis Search section, which is where we have all of these searches or strategies that you can choose stocks from. And in the folder labeled Searches Prudent, the first one we're going to look at is called High VST Newcomers, and that is the search we used in that original strategy back in May of this year. And this search only has one parameter, and that is that the stock's VST must be trending weekly from less than 1.4 to greater than 1.4, which is an excellent VST score. So this is really looking for stocks that are moving up because of a combination of fundamentals and timing. All of the stocks that meet that one parameter will then be sorted by their VST score, bringing the highest ones up to the top of the list. So if we run this as of the current time, you'll see there's only 4 stocks that were found. And the VSTs are all above that 1.4 level. Well, let's take a look at how this search performed in the testing phase. We're in the back tester now, and for all of tonight's tests, we did use the DEW timing signal. And you do need to have the auto tester activated on your VectorVest account in order to use those market timing signals in the back tester. If you don't have that, just give our offices a call. We'd be happy to set you up with it or give you a trial. And so these are the results of the original strategy, which was done in May of this year and looked back till May of 2012. Holding a 5-stock portfolio from high VST newcomers had returns of nearly 57%, commissions were only $100, and the drawdown was 11.5%. And at the time of the recording, this portfolio had 5 holdings in it. 3 of the 5 were actually purchased back in July of 2012 and were still inside the portfolio. The biggest gainer in there was Magellan, which at that time had a 218% gain. And we received a few phone calls and people saying, well, that stock has gone up 218% in the past year. And you may have thought, that stock has made its run. It's gone up too high. It's parabolic, whatever term you'd like to use. Well, we'll get back to that in just a moment. We have a few other stocks that are also up 38% and 20% respectively, with just one losing trade in there at the time. Well, bringing that same back test to the current time frame through today's day of trading raised the gains up to over 90%. The commissions were still only $100, so there hasn't been any other trading going on, which means we're still holding on to the same 5 positions. And now Magellan is up 366%. That's a 140% rise from when we were looking at it at the end of May. CCP right below it is up 22% since that time frame. As a matter of fact, 3 of the 5 stocks shown here are better than they were back in May. So we know that high VST newcomer search has worked out very well over the past 1 year and 1 year and 4 months. And just take a look at the equity curve. Remember what that DEW timing graph looked like. The market has had some ups and downs over that time frame that we were measuring. Yet this graph seems to continually rise. We're back in the Unis Search section now, and as the Director of Retirement Services, I feel like I should show off one of the searches we have in the retirement group. So you can see Search's retirement here, and I've highlighted high VST plus YSG stocks. Now this search has a few more parameters than the original one we looked at, beginning with the stock VST must be greater than or equal to 1. But we're also looking for stocks that have a good relative safety of greater than or equal to 1.25. Stocks with an earnings growth rate of greater than or equal to 10%. It has a volume requirement of 25,000. It also must have a dividend yield, safety, and growth vector of greater than or equal to 1. And on top of the parameters you see here, these stocks will be sorted by the VST plus YSG. So we're really trying to layer in some more levels of quality into these retirement-minded searches. And let's see how this search has done over those same measurements. Now just to keep everything equal, I did run this over the original time frame from May of 12 to May of 13. And it was up 15.3%. Not as big of a return, but I think our retirement-minded subscribers would certainly like 15% in the year. Again, only with $100 in commissions, and the drawdown has been cut nearly in half down to 5.8%. And we have some different stocks that are shown here. The biggest gainer was AMC, which was up nearly 34% during that 1-year test. Bringing that test to the current time frame hasn't changed the overall gain too much. We did have a little bit of trading in there as the commissions are up to $180, and the drawdown also increased slightly. There are still 5 holdings in that portfolio. AMC is still in there and still leading the way and is now up 46.5%. You have 3 other winners and 1 slight loser in there, down 1%. So from a more conservative standpoint, using VST as your stock selection criteria, as well as your stop criteria, also works. We'll move back to the Unis Search one more time. And what if you just wanted to follow the guidance that VectorVest puts out? We're back in the folder called Search is Prudent, and there's a search called Top VST Vector Stocks, which is just what it sounds like. The search will begin with all the stocks currently in our database. We do have a volume requirement again of 25,000. We're eliminating any of those market ETFs, and we're looking for stocks that are priced at least $1. And that's it. These are going to be sorted by VST, so essentially you're just looking at the top VST Vector stocks that we currently have in our program, and we sort and rank all the stocks every day by VST. And we'll take this one into the back tester and show you the results. And as you may have guessed, I have saved the best for last. Top VST Vector stocks over that original May to May time frame was up 70%. That's even better than the high VST newcomers that we originally showed. The commissions were still only $100. The drawdown was much better at 7.75%. And of course it had 5 holdings in there as well, with one of them being MFG, and at that time, because it had purchased it a few days earlier than the other search, it was already up 239%. But we have AGI with 84% in 1 year, and 21.18 in a loss of 11% on one position. Well, those top VST Vector stocks through the current time frame are now up an unbelievable 102.5%. And again, the commissions haven't changed. There's been no other trading. We've had a slight increase in the drawdown, but it's still down below 10%. And just take a look at that equity curve. Magellan being the biggest winner in there, up that 397% from purchase price. 87% still on AGI. We have a 24, a 10, and our one losing stock is a little bit better, but still underwater by about 7%. I'm going to highlight all of these stocks, and we'll take a look at a stock graph. And I've chosen to open up our stock graph just showing the price of the stock in the upper portion, and the VST is plotted on the lower portion. And you can see that MFG, that big winner, has had some ups and downs with its VST, but overall staying above 1 has kept it in the portfolio. And just for comparison, I'm going to add one more graph to look at here, and we'll make this one a market timing graph. So on the left side we have the stocks that are in that portfolio, on the right side we have the overall market. And you can see how much better this stock has performed than the market's ups and downs. Similar story for AGI, a bit more volatile, but still moving up more than down. Domino's Pizza. Webjet is one that has certainly shown us some volatility, and its VST is still above 1, although it is trending down. And RRL is the one that we've held on to all the way through that period and just recently started to show some signs of life. So all of these tests performed well within the 1 year and the 1 year and 4 month time frame, ranging anywhere from 15% to over 100%. The opportunities are out there. Dr. DeLito wrote about this in his essay in the VectorVest US version just last week. In there he had a question and answer with himself where he asked, what's the secret here? Why does a stop of VST produce such great results? Well, mathematically, a stock whose relative value squared plus the relative safety squared is greater than or equal to 3.0 will never have a VST of less than 1. This means that if RV equals RS, RV and RS can each be as low as 1.225, and the VST would be greater than 1. In layman's terms, the prices of stocks with good fundamentals hold up better than weak stocks, and even if they do falter, they will recover. That's the power of VST. Well, we will keep testing how the VST indicator can lead you to big profits, and we encourage you to do the same. Thank you for joining us this week.